Hello again, I'm Stephen from TEFAT, and today I'd like to give a presentation on not-for-profit clubs, the bookkeeping entries, and I'll be referring to my textbook from TAFE, P. McGrath and R. Walsh, Applications of Accounting Procedures Workbook, and the publisher is National Core Accounting Publications, Sydney, 1995. I'll cite that at the end as well. I'm just referring to some key points from my textbook. And so not-for-profit organisations are just that. They do make a surplus, and the surplus is put back back to the entity, but the profit isn't distributed to shareholders or the owners or the partners. They do make a surplus, but their goal isn't profit maximisation or a business as such. The not-for-profit club is for the benefit of members, a common pursuit, such as a sporting club or an RSL, a licensed club, a community group, etc., charities. So not-for-profit organisations can be incorporated as a legal entity or just left unincorporated. And I'm just going to be going over some of the statements, general journal entries, general ledger entries. They need a constitution for the rules and regulations of the club, and they're run by a committee, the president, the secretary, the treasurer, people like that. They're a management committee. They need a minutes book, they need records of their correspondence. They have sales journals and receipts journals, cash payment book, cash receipts book. They sell things, such as a licensed club selling wine at the entry. So they purchase that wine and they sell the wine, just as an example. So one of the terms you might see is accumulated funds. That's found on their balance sheet, which is total assets minus total liabilities. It's actually not called a balance sheet. I'll just get to the type of income statements and cash flow statements with a name for not-for-profit, but I'll just get to that. They've got a trading account too, which is operations around the bar and poker machines area, and any expenses and income in the trading account. I'll get to that. So part of their revenue is member subscriptions, either in arrears or advanced subscriptions. Advanced subscriptions are like a current liability, and membership subscription in arrears is a current asset. So around the bar, they have bar sales, bistro, refreshments I mentioned, and yeah, that's in the trading account. But below the trading account are just the general expenses, such as postage, cleaning, electricity, and I'm just kind of talking generally because I'll be elaborating a bit more. So the cash flow statement for not-for-profit clubs is called a statement of receipts and payments. All the cash receipts and payments are listed, totaled up, The profit and loss statement for a not-for-profit club is called an income and expenditure statement. That's either a surplus or a deficit, and their balance sheet is called a statement of assets and liabilities to find what you might know as owner's equity. It's called accumulated funds, which I mentioned before. So back to membership subscriptions. Sometimes they pay in arrears, they owe their subscriptions. That's on a current asset, as I said. And then some members pay their subscriptions in advance. That's their current liability on the statement of assets and liabilities. And that member subscription is a T-shaped ledger. All entries have to be put in ledgers. There's a ledger for bar trading, opening balance, purchases, bar expenses, and getting usually a bar surplus. And that's on the debit left-hand side of the ledger, and inventory is on the right-hand side of the ledger in bar trading. So all these items have to be totaled up. It's a podcast format. I won't be writing on the whiteboard for this. I just found that a podcast format was better for me. And that statement of receipts and payments, examples, cash receipts, member subscriptions, entrance fees. The members can be charged a joining fee to start with. That's added to capital. Donations, if it's a charity. Cash payments, just general things like electricity, rent, telephone, cleaning. And the income and expenditure statement starts with the trading account at the top, income, and expenses, a bit like cogs around the bar and pokies area. And then you get a total for the trading account, which is a bit like gross profit in a company. And then below that you've got all your operating expenses, things like rent, cleaning, electricity, and you either get a surplus or a deficit. And the statement of assets and liabilities, you'll probably be used to that if you've already covered balance sheets. But the only difference is owner's equity is called accumulated funds. And yeah, so I think we're going okay. I'll just keep going. I've also got another set of notes to refer to, and okay, I may as well get to those notes. So the not-for-profit organisation has objectives and benefits for the members with a common interest. Usually they make a surplus, but on their P&L, which is called just statement of income and expenses. Just double check on that, because as we mentioned, there's the financial statements have got different names to company ones, so just double check the income and expenditure statement to clarify. So the subscriptions are put on the statement of income and expenditures, but if it's a joining fee at the start, it's added straight to capital. So the organisation, if it's incorporated, it can be sued. The whole property make contracts as a legal entity, but if it's unincorporated, that's left to the directors to do. And we mentioned about the management committee, and also just be reminded you need a cash payments journal, a cash receipts journal, things like subscriptions, donation, fundraising, wages, payment of expenses in the cash flow statement, which is statement of receipts and payments. Remember that term in the balance sheet: accumulated funds, similar to owner's equity, total assets minus total liabilities. You also need a sales ledger and a purchases ledger, as we mentioned. And just remember that trading account, operations around the bar and the poker machines, bar, dining sales, green fees if it's a golf club, poker machine revenue. I used to work in a club, and I was asked to collect the poker machine revenue one morning with accompanied by a director. And typical not-for-profit organisation expenses, purchasing liquor, food, items to make up for the chefs, food, the raw materials, the vegetables to make the meals. Also, if it's a lawn bowls club, maintaining the greens, but that became expensive for a lot of clubs, and many have folded. That you notice in the quieter suburbs and along the railway lines. Sometimes the old lawn bowls club gets converted into a community space or childcare. Might continue as a not-for-profit organisation, because some childcares are not-for-profit organisations. So on their income and expense account, they make a surplus or a deficit, and the financial statement is called income and expense statement, as we mentioned. Cash flow statement, statement of receipts and payments, balance sheet. Don't forget accumulated funds. So again, my source is P. McGrath and Rex Walsh, Applications of Accounting Procedures Workbook, National Core Accounting Publications, Sydney, 1996. I referred to Module 8 on not-for-profit organisations. This was the TAFE textbook in the mid to late 90s when I attended TAFE. And that's the citation, the source that the TAFE students used. Okay, I'm Stephen from TEFAT. Thanks for listening, and have a nice day. Bye.